Welcome to another session of the course. In this session, we'll be talking about plotting trend lines. We'll be talking about trend lines. Now, there are a few things I want you to know about trend lines because they are very, very important to every technical trader. In short, you should not play with learning how to plot your trend lines properly, because it's going to be either the beginning of your success or the beginning of your failure. So now let's dive into the course. Or before that, I want you to understand that trend lines they perform the same function as support and resistance lines or support and resistance zones. The only difference between a trend line and a support or a resistance line is that a support and resistance marks out the swing highs and the swing lows of a ranging market. That is a horizontal trend, a movement that is not trending upwards or downwards, while a trend line marks out the swing highs and the swing lows of a trending market. So a trending market could be an upward trend or a downward trend. I believe we treated this in details in the previous classes. But in this class, we are going to be going into the practical aspect of plotting trend lines. Before we do that, let's look at some few points which we need to note. Trend lines. Trend lines are diagonal lines, like I said. They are used to mark out successive swings on a trending market. It helps the trader anticipate or determine when a trend is about to change. Now, this is why I said having a good knowledge about trend lines will either make or mar you. The reason for this is that you can be in profit not knowing that a trend is just about to change. But if you have good knowledge about trend lines, you will be able to identify when a trend is about to change or when it's just about to begin. Now, it is very important in trading because it helps you to spot a trend change or a trend continuation early enough so you can take advantage of the following move. Now that we have this out of the way, let's dive into the chart and see how we can plot accurate trend lines and how we can do this. Let's follow me to the chart. Okay, welcome to my chart. Now this is USD JPY, that is US dollar against Japanese yen chart. In this chart, you can find out that I've already plotted out the support and resistance using the same principles and concept I taught you in the previous class. Now, to plot our trend lines, I will be taking this example. Maybe later on in the course, I'm going to do a live analysis, multi-time frame analysis that will help you, that will give a more concise or a more concise approach to trading. Now let's look at this. If you look at this chart, you find out that this looks like it's a downward trend. Not that it looks like it is a downward trend, it is a downward trend. But if you don't have knowledge of trend lines and you just saw this trend at this point, look at this point, you may enter this trend hoping that it will continue going down like this, not knowing that this is almost the end of the trend. Now the trend line helps you to spot this on time. So let's see what the trend line can help you do. Alright, to plot a trend line, I'm going to bring out a technical tool. It's a line. If you come to the trading view, there are several types of line. You see the trend line, you see the info line, you see the trend angle, you see a lot of lines. We use this for for our support and resistance. That's this horizontal line. You can use this one also, the horizontal ray. The ray either rays to the right or it radiates to the left. This is the vertical line. So enough of the lines. Let me just go to what we have today. We pick the trend line. By the time you've taken the trend line, what we are looking at, let me still use my arrows to point out the swings that we're concerned about. Where are you? Sorry. Okay, the arrow. Now, you find out that this is a swing. I will need the red arrow. Hold on. You find out that this is a swing. This is one swing. This is another swing here. This is another swing I have here. This is another swing. This is not a swing because it's a moving candle, so you can call this a swing. Now you may not see this as swings, but if you go to, this is the monthly time frame. If you go to the weekly time frame, you will find out that these are actually major swings. This may look like just a candle to you, but this is a swing. If I go to the weekly time frame, maybe I should show you that. Let's go to the weekly time frame so that you see what I'm talking about. Now look at this. This is a swing, this is a swing, this is a swing, this is a swing. So for clarity, let's go back to the monthly time frame so it's easier for us to plot. Now that we have gotten our swing, what we need to do is pick your line and try to join these swings. Now in drawing your trend lines, you need to make sure that the line touches the tip of the wick. Now look at this, is the wick, it's touching the tip. I'm going to delete these arrows so that we can see what I'm doing clearly. Okay, hold on. Good. So now that the arrow is out, you will find out that this my trend line has just touched the tip. This is another tip, it didn't touch it, but we want to join as much swings as we can. Now look at this. If I bring it a bit low, you find out that it's touched this, it touched this. Now the reason we take the swings is so that you will not be faked out. If you take the candles, now for example, let's look at this one. If we take the candle body, you find out that we may think that price once has broken this place and is about to go up, and you now decide to make a bullish entry, and before you know it, the price comes back into the trend line and takes you out. Now this is manipulation. So the reason you have to plot your trend line on the tip of the wick is to avoid manipulation. Now we'll be treating how to avoid manipulation in the subsequent classes. So let's just finish up with the trend line plotting. Now look at what has happened. We've been able to plot our trend line correctly. Let me check if they are on the tip of a candle. Yes, I think we are good. This is good. This is good too. So we're able to join 1, 2. This was very close, although it didn't get to 8. This was also close. So this is good. Now also look at this. Look at on the reverse side. You will see that there are also there are also swings. Let's see this one. This is a swing. This is a swing. This is also a swing. Okay, this is also a swing. You can see another swing here. Now I'm going to try to join these swings. I can see another one here. I'm going to try to join these swings with another trend line. Now let's see what we can get. Picking the trend line, I can try this. Let's see what is possible to get. Let me take out the arrows so that we can see this clearly. Good. So now looking at this, you can find out that we can join this. We've been able to join this swing to this swing and down to this point. Good. Or you can do this, you can use this and this, but I think I prefer this. So there's no hard no particular way of drawing a trend line. Just make sure you join the tips. The tips are very important so that you don't get swiped out or faked out. Now looking at this is just support. This is support now because it's on the below the price. Support, this is resistance, but these are diagonal supports and resistance, just like we have the horizontal supports and the horizontal resistance. So you can actually call a trend line a support line, but it is a diagonal support line. Now looking at this, it means that you can now say that once price leaves this trend line, there is a possibility of price turning in direction. Now if the price was going down and it breaks out, just like we're seeing here, it's looking like a breakout here, looking like a breakout. Now because price is just about to break out here, or it has broken out, I'm going to show you the effect of this. Now because price are just broken out from here, we can now, something is triggered in our mind that the trend is about to change. It may not mean that the trend has changed completely, but it prepares our mind for a change in direction. So if you are on a buy trade from here, let's say if you're on a sell trade from here and you've been selling this trade all the way to the downside, you are now prompted to understand that there's a possibility of a change. So you are preparing yourself to take profit and all that. So this is the function of a trend line. I believe we understand this and it is simple. Now look at what happened when the trend line was broken. Now that we have drawn the trend line, gotten it out of the way, we can prepare ourselves and say, there's a break. Then we look for other entry strategies which we will learn in the future on how to take advantage of the move that is about to happen. Now let me show you what just happened after the trend line was broken. Now look at what happened. Look at how price rallied up. It came back, retested the trend line, and it kept on going. This is just a replay of some trades we took sometime in the past. So now look at what happened. The pair started rallying up and rallied up and rallied up, and so imagine you have spotted this at this point. You would have taken advantage of all this move. Look at all this move happening. Look at as it's happening. As you're saying, you can also take note of how the horizontal support and resistance is also reacting to the trade. Now look at how it's playing out. Now this is the importance of marking out your trend lines and your support and resistance. It makes trading easy for you. Like in the support, it helps you determine the zone in which the price is trading. Alright, so I'm going to stop this. Look at the rally, and it rallied all the way to the upside. So now let's look at some other things. Now looking at these two trend lines, this is actually called a price channel. Once you have two trend lines like this, opposing trend lines like this, is called a price channel. Now look at what happened. If you missed this point and the price traded all the way down, all you need to do is find a way to make an entry somewhere here that will take you out, take you all the way down. Now the trend line gives you such opportunity. It helps you to anticipate where price could get back to. Like we talked about, this is the impulse leg. It helps you to know where price could retrace to. Although there are other tools which I'm going to be teaching you, the Fibonacci retracement tool, which can help you further narrow down where price will retrace to. Now, the trend line also helps you to anticipate where price will retrace to before resuming on its impulse leg like this. So look at this, it came back to this trend line and resumed back to this point. So if you were able to catch this move, even if you didn't get this, you could also make an entry here and try to target the next trend line or the next point of the trend line, or even the support and resistance. I hope this is clear enough. It's okay that we have gone to this point, but I want you to go ahead and practice with some major pairs. Try to map out some trend lines both on the monthly, on the weekly. You can see these trends on any time frame, so you use your trend lines on any time frame. You can map out on the weekly time frame, you can map out on the daily or the hourly time frame. Thank you for attending this class. I'll see you in the next class. Thank you.